The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, except because tomorrow being Good Friday and start of Passover. The markets are closed. So I want to wish those of you celebrating a wonderful weekend. Let's look at the Dow. The Dow is up 248 to 24,097. The S&P is up 26 at 2631. The Qs are now up. They're up 65 at 7,013. That's the comp index. I'm sorry. The VIX is actually down. It's down at 20.27, down 2.80. That's a big percentage move down, but it's still above the 9-period moving average. We're also looking at, just wanted to show you this quickly. This is what I said to subscribers to my opening call this morning, is that we can expect this rectangle formation to be achieved, and a rectangle can last a lot longer than your patience, but we were stuck between 25.93 and the high that was made right here at 2 o'clock on the 28th at 26.3375. The high today is actually a little higher. It actually went to 26.42, round number high, pulling back a little bit off those levels. Now, what's really important is that, look, this is just one picture that I'm showing you, a daily, a monthly, and a weekly. I'm sorry, the daily, the weekly, and the monthly is being replaced by the 120-minute chart. I'm doing a webinar on April the 3rd. That is Tuesday night, 6 to 7:30 Eastern Time for my subscribers. If you'd like to come to it, you can go to the front page of TFNN. It's a money-back guarantee, so it's like almost for free if you just want to do that and then poop out on the actual newsletter. But look at this. It's called the power of the fourth highest peak in the Chapman wave methodology, peak D. Simple technique. You merely identify each higher high. Let me see if I can do that here. Right here. You identify the lowest low bar, then count each successively higher peak. It must be a high peaks even by 0.0001. It just has to be fractionally higher, and that leg becomes the previous high becomes a peak, and the new leg starts 1 penny above that previous peak. And then the fourth highest peak, peak D, alphabetize them, it goes to a G. But D, the fourth one, is where other things can happen. What do I mean by other things can happen? Just to make it simple, my problem with the techniques I've developed is that they use a lot of words, but I'm a visual person. I came to them visually. So look at this. On the 29th of January, the E-mini makes its high at a peak D. It plummets down, makes another rally, makes the arch formation that I always talk about. You'll see it here in the weekly, this H pattern, lowercase h, in my CD introducing the Chapman wave methodology. It comes under the heading, the dreaded H, double bottom type formation, chapter 17, I think it's slide 330 or 332 or something. It starts. So you go to the fourth highest peak at 2807 and you come down sharply. I use other techniques, the left side, right side, price time match. I use the 200-period exponential moving average, the orange line. Look how well that's been repelled, or propelled, I should say. It's been a magnet and then repelled above that. And the 200-period, this one here, the simple moving average, that's what most technicians look at. They look at the SMA instead of, I love the exponential because it looks at the last closing price, puts much more importance on that. So look, the H pattern, what am I talking about? The daily has two peak Ds at lower highs. The weekly has a peak D at 28.82 on the week of the 2nd of February, obviously. That's the week that it made the high in January the 1st, January the 29th. Comes down and makes that H formation. And it's struggling. Look, the MACD is stochastic, looking terrible. And now you've got this particular 120-minute chart makes a peak D. So it's really important. And what does it do? It means there are times where that recycles higher, And there are times where you just want to say, whoa, this is the time to be really careful, especially when you get a whole bunch of these things coming up in different sectors. Okay, here we go. Dow, INDU. The Dow it was up much sharper. Now it's got repelled by the 9-period exponential moving average. 24,166 is the 9-period moving average. And what it hit today was the high, 24,178. It went just a tad above it, and now it's below it, struggling. Look at the stochastic looks terrible at 21%. It just doesn't show the kind of strength I like to see. It will show strength if by Tuesday or Wednesday the Dow is above 24,400 and is the stochastic is up at the 27% area instead of 21, and the MACD has almost recycled higher, but at least the histogram is starting to improve. Not happening right now. So I'm still looking at this, and I'm saying the peak D in the daily at 26,660 on the 26th of January. Big rally failure. We remain short for subscribers. And this peak E in the weekly chart with that arch formation and the peak E with the Chapman wave Roman candle, I cannot ignore that action. That chart, that particular candle. Get that throat lubricated. I think I'm paying the penalty for all those years I did those 3-day seminars without stopping to talk, to rest the voice. Okay, so what we're looking at here is it's really important. This is the end of March. This is the end of this particular candle. Not a good candle. 2 big red candles. It's saying the market is under some kind of distribution at this particular point. S&P SPX.X is down. It was down. Now it's up 24 at 26.29. Hasn't even gone to the 26.50 9-period moving average. It can do it, but it hasn't yet. And the stochastic at 15% is showing no strength whatsoever. Neither is the MACD. A little worried about that. QQQ, let's just get to that. Down, it's up 155 at 158.78, coming off a trough D. So it makes a peak D, all-time high, on the 13th of March at 175.21. And we were very fortunate to use the 120-minute chart that had a peak D and then a fractional E that very day. We were lucky to get short right there. We took a 22% profit in some of the position, and today I said to get out of the tiny little position, 32% gain. It's nothing to sniff at. We want to keep a core and add to the short position because I think that the NASDAQ is going to be under pressure for a while longer, but it's only in the leg D in the monthly chart, so we'll have to see what happens. In the meantime, the support is at 150, major support at 157, I'd say 157s over the next week. It must hold that under all circumstances. Now, IWM. So the IWM is running nicely off the low of yesterday. It's actually one of the better looking charts, but that doesn't mean to say it's going to break to the upside. It just says it's one of the better looking charts, and maybe the 148 is really strong support, is at 151.80, and the 153s is very strong resistance for now. Let's go to gold. Gold has been very weak lately. It's down 2 again today, 13.27. It was long. We're out of that position. We don't have any position in gold. It had a little bounce, and that's all we were trying to play. That peak back in January, this is something to monitor. And I'm going to talk about the dollar and gold when we get back. I'll add silver, add some currency. Very important phase we're in right now. Also, I'll talk about IYR, the weakness.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We're back. Dow's up 219, S&P's up 25. So this is what I wanted to show you. You see this down, the use of trend lines. I've found ever since I began charting way back, and I used to hand chart. I used to pencil in the prices of the Dow, the S&P, the FTSE 30, and the Nikkei, using engineering paper and a ruler. So I go back a while. I'm looking at this and I'm saying this trend line that I've just drawn in here is a short-term daily trend line. If the dollar is at 90.16 up 7 cents is able, because the MACD is still pretty good. It isn't great. It's actually negative, but it has rallied quite a bit. The stochastic's improving. This is what I wanted to see in the S&P and the Dow right now. I could still do that Tuesday, Monday or Tuesday. Hasn't done it yet. It's been flat. It hasn't curved to the upside. What's really important here is that you've got the potential for a cup formation in the dollar. This is the weekly chart. You've got a potential for the MACD, which is just crossed positive this week, and the stochastic, which is flat but rallying at 29%, to at least give support. And one of the reasons why I've said gold and the silver and the dollar basically in a trading band, a fairly narrow trading band, not narrow if you're trading intraday, but narrow if you're looking at it overall. And this is going from a potential rectangle formation in the weekly to a potential cup. And the only way I can say that it's going to be not a potential cup, but a real cup formation is if next week, I don't think I can wait more than another week in this particular pattern. Otherwise, it's going to be a failure pattern. It needs at least once to pop over to the 90.44 high that was made last week. It's got to get above that. And it really needs to close for the first time in... first time since the week of the 8th of December above the 9-period moving average. It just hasn't been able to do that. And it won't do that if you're looking at the euro, which its weekly chart is holding pretty well, even though it's weak today, unless the euro at 1.229 starts to trade intra-week below 1.22387, the low of the 23rd, the low of last week. It doesn't have to close it. It just needs to trade there. And that's really going to give the dollar a boost. If you look at the USD JPY, which is the yen or the dollar yen currency pair, This is a very strong new leg A. That was a peak C minus. This is a brand new leg A. MACD's improving. It's actually positive. Stochastic's got a good action, but it's only at 41%. But here you've got price. If I was to say the USD JPY daily chart is acting well, that doesn't put it into the perspective of the fact that it's testing a trend line. Remember the trend line we looked at in the dollar? Well, here's the trend line in the weekly chart. It can't rally above it. It's at 106.27. If, in fact, it does rally and it can get to, it's got to go above the high of the 13th of March. No, it hasn't got to go. It's got to close above 107.286. See, sometimes it's important just to go there. Other times it's important to break and close above or below. So this is an instance where it needs to close above it. And that'll also help the weekly chart. But on a weekly basis, until the yen is able to close 2 out of 3 weeks in the, I'm going to say in the 107.50 area, that's at 106.28, shouldn't be a big deal. Come on, $1, but it has been a big deal. If it's able to do that, that's going to put a lot of pressure on the euro. Okay, so and silver right now, silver is trading at, it's just in this trading band. You know. Now, the whole thing about silver at 16.29, up 0.04. If it closes under 16.10 any day of the week, just in the next, any day in the next week, that's going to be not good for both the silver and not good for the gold, and it's not going to be good for the weekly chart. If you look at high-grade copper, and this is going to be very interesting. It had a nice bounce, but it's only a bounce. The MACD is trying to turn up. The stochastic has turned up above 20% to 21%. But this is just the start of an attempt to break above the 200-period moving average of 3.04. Remember, that was the support 3 weeks ago. I was saying, better hold, then it broke down. So 304, let's say 304 to 310 is the strong resistance in copper. If it's able to close above there 2 out of 3 days in the next week and a half, that's going to be the first time that the copper chart has actually shown some strength in the daily and some strength perhaps in the weekly. Now, what am I missing? Crude oil. We're missing crude oil, and we've got to spend some time on the interest rates. Look at this. Crude oil is up 34 cents at 64.72. It's holding. It's in the upper band. It's made a cup formation. You could have a little bit of a handle here, but that says it's 64.73 anytime next week. If there's a close below 63, it's going to go quite a bit lower. So this is very important. And if there's a close above 67, I would suggest to you that crude oil is in play for April as well, as it has been in parts of March. All right, TLT. TLT right now is up 76 cents at 122.07. So my contention has been, and I don't know if this is even a contention anymore because I don't know if it's even in play, that if bonds rally and yields come down, money will flow. That would hint that the equity markets are making people fearful, and that there's a good chance money will flow from the volatility that we've seen for the first time this year in quite a long time, in many years, in the equities, certainly in some of the big winners, and then money will go to the so-called safety of bonds. So the TBT, which is trading after the peak. Remember, I've got a webinar coming up on peak D. You can count in this session how many Ds we're going to see. Peak D top at 39.66 on the 21st of February in the TBT, which is the inverse of the TLT, the 20-year T-bond fund. So that's basically looking, instead of the TLT, there's a short TLT with the TBT. In leg E to the downside, and in leg E to the upside on the TLT. Question is, where would you consider going in for the 30-year, can I get there? Yeah, for the 30-year TYX yield to start going for a leg D in the weekly chart? Well, I'm going to wait. 29.44 is the 200-period moving average support in the weekly chart of the 30-year T-bond yield, TYX. And I'm just going to say that I believe at this particular point, the 10-year, the TNX, is more important, and so is the 5-year, the FVX. Those yields are way more important, and they've made peak E in the TNX at 29.43, peak D in the weekly chart, and a leg B in the monthly chart, and that's the one that says, looking out, we could be looking at higher yields. But short term, this pullback is really important, needed a bit of a break, so it's going to be very important at 27.44. How does 27.20 to 26.90 hold? That's going to be key for me in the yields. It's just, I wanted to get that out. So that's the yields. I've done everything. I now want to go to stocks, etc., and we're going to be looking at various questions I had. I'll be right back. Dow is up 220, S&P's up 26. Basil Chapman, Tiger Technicians out.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I'm going to also include today, because it's the last day before the weekend. I know there are some of you that ask me, what am I going to be going through in the webinar? What's the importance of the webinar? Well, first of all, I'm going to be demonstrating something about the peak F, the fourth highest peak in the Chapman wave, why it is so critical to be able to analyze it. On the 1st of February at 195.32, there's a little stock called Facebook. And I've been talking about this and saying that it's a 10-bagger. It's gone from the 18s low to over 180. If anyone has it and you're really thinking about what should I do, I would definitely, I'd said at 180 or a little higher, just at least take money off the table because it's, I mean, 10 bagger, how often do you get 10 baggers? That was the one reason. The other is I started talking about this peak D on the 1st of February in Facebook. Well, it's gone from 195 to the 149 area. It's trading now up $6 at 159. Nice bounce. It should have a bit more of a bounce over the coming days. It's been hammered. Peak D in the weekly chart, peak D in the monthly chart. If by the end of the day today it doesn't go above 195.32, I just don't think it's going to do that today. So this is a peak D, and the technicals are starting to deteriorate. How important are these peak Ds? Well, I would say going from 195 to 149, that's a pretty serious decline. And the technicals are still very, very weak. What about Amazon? So Amazon is a leg E in the weekly, in the monthly chart. It made an unusual peak G in the weekly chart, but there's that peak D. I've been discussing this for a while now. It made 1617 the high of the 13th of March, the high. It opens the next day. I always look at round numbers, even though today is a lot different to the old days where they used to yell out, sell at 100 or sell at 105. Those round numbers were very important. Now with automatic trading, yeah, and not only that, we had eighths. Now you don't have eighths and halves. It opens the next day at a round number 1597, and then the following day it opens at a round number 1595. So it's gone from 1670 to today's low, 1617 down to 1365. I would say that that's a pretty serious peak D top. What about the SMHs? Well, the SMHs have gone from 114.55 on the 13th of March, the semiconductor market vectors ETF, peak D, 114 to yesterday's low of 101, I think it was, 101.79. Lousy action today, it's only up 1%. Couldn't be, it's got an inside bar. I think there's a problem in the semis. And look, peak F in the weekly and a leg C. Now, this leg C is going to change. I'm starting to do quite a bit of work here because I've done a change in the SOX index. I've got the SOX index now in leg E. This is the actual index itself of the semiconductors, the Philadelphia Semiconductor Sector Index. Peak F, I'm calling it an F for now, in the weekly chart, and there's your peak D in the daily. And the reason why I had to do this is that the SOX is way more accurate because that's the index itself. It's not an ETF. And at 543.03 was the low in August of 2015, and a higher high at 552, a higher low at 552.26 of the week of the February of 2016. So you go A, B, C, D, we're in leg E. That's the reason why I'm saying I'm looking at these monthly charts and I'm saying I cannot take it lightly. Even though I'm still a very long-term bull, this is something I have to take seriously, and the end of the month is coming in a few hours, and we'll start April. And this is going to be very important for many of the indices. Yes, we're oversold. A lot of the indicators show that, so we're having that bounce. But if you look at the, if I go to the IYT, which is the transports, nice move off the low of yesterday, but look at the chart formation. It made a peak. Let's see, what did it do? It went to an E at 206.73 on the 16th of January, pulls back to a trough D, rallies to a peak C, and then arches over. This arch pattern is something to keep in mind. It's a harbinger of a rollover if it takes out the 9-period moving average and starts to trade under it. So we've got an E with an H pattern in the weekly chart of the IYT, the iShares Transportation ETF. That's saying to me, it's kind of confirming what the Dow is doing, because the transports in the Dow is, it's not a technique that over the decades I've always heard people talk about it, and I always look at it and kind of shrug my shoulders. But it is, I like to see that the transports are confirming a Dow all-time high, because it's saying, hey, you've got cyclicals working with the fundamentals of the economy, trains, planes. I don't know what else would rhyme with that. and now that it's down, it's pains. So you're looking at a very unusual pattern, because it went to a peak C, and it might be a peak C minus. I don't know. I'm leaving it out for the XAL. This is the airline index, but it did make a peak E in the monthly and a peak E in the weekly. Just watching it closely. It's coming off a doji low, off a 200-period moving average. Hey, maybe this is going to turn into something much bigger. But at this particular point, I just got to be careful. IYR. Now the questions in the den, a couple of questions. Peak D in the daily chart of the iShares Dow Jones US REITs Index Trust. So that's made a D. It's pulled back sharply. I have to put a down arrow because the stochastic and MACD failed. But the MACD made an M-shaped pattern by quickly turning up. So we might see that this is the one area where you're going to find a lot more strength after the peak E in the monthly, a peak F final high that was way back in August of 2016 at 85.79. Most recent low of the recent peak E. This is, remember I said, this is one of the most unusual charts I've seen. It goes to an all-time high, peak F, plummets down from the 85s to the 72s. And then what does it do? It has an inside Chapman wave buy mode, A, B, C, D, even goes to E, but the high is way off the all-time high in the 80, or what I said was, in the 85s. The high goes to 83.27, and then it plummets down to 71.26. Look, there's a 1-to-1. It's actually a Chapman wave parallel 1-to-1 down move, and that says you can have an inside bar, which is what we've got. So the IYR, I'm watching this closely because for subscribers, we're going to be looking to see, and that's what's going to be so important about this webinar coming up in next week, April the 3rd, Tuesday at 6 o'clock. I'm going to be looking to say what's working in this environment, what are you going to be really careful of, and I suspect that I won't be changing my mind that the semiconductors and the tech sector in general is going to be highly volatile, and many are going to make lower lows and lower highs. Question about UMH. Now, this is not UNH, United Health. This is UMH, which is UMH Properties. This is leg B to the upside in the daily. A very nice chart, trading at 13.46. Now, I need to mention this because the person who asked the question, Peaky in the Den, is able, because it's a private person, is able to buy these, even though there's only 55 or 56,000 traded, some days 180, maybe 250, very low volume. So I tend to not put I hardly ever put the low volume stocks in my newsletter. This is real tough to get out of, not hard to get into, but hard to get out of when they go against you. So I'm just saying this is looking good. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's just go UMH trading at 13.46, up 2 cents. So this is the kind of stock. Now this is what I would go. I'm just going to show you a Chapman Wave methodology. So it goes under 1150, starts a new move to the upside. This is leg A, and then it goes to a peak A. But wait a minute. There's a lower A right there. You've got to count each one. So that's an A, a new A. That's a new B, and that B is gray B because it's underneath the previous one. And now all of a sudden you're at C. So yes, I think it's going high. It's acting well. This is your kind of stock. But for a majority of people, this is tough to do. I'm only going to say UMH or the questioner for peaking in the den. Yes, you can look at this as a long but only starter position because it really needs to test the 1270s a little bit more. But looking out, I think it's turned the corner at least for a decent bounce towards the 1450s, if that's what you're looking at. But I would not get too carried away. Okay. Now, I had a question, as always, I had a question about Boeing. Boeing right now is trading at 325.47. Remember, I had a Chapman Wave parallel count to the downside, and that 371.60 all-time high. Now, I'll say it again. How important is the peak D in the Chapman Wave methodology? Well, Boeing made an all-time high in the daily at a peak D. Let me see, I wouldn't be surprised if the weekly, let me just check the weekly if I ever noted. Yeah, and it made a D and then a little bit of an E right there at that all-time high in the 120-minute chart. So peak D in the daily, peak D in the weekly chart, and it's a leg E with a potential at the end of the day to call it a peak E in the monthly chart. And I'm suggesting to you that Boeing is an airline company, and the other, it's in the PPA, which is the ARCA Power Shares Aerospace and Defense ETF. But I'm looking at this, and there's the peak D in the PPA. Can you believe it? And a peak D in the weekly chart, and a leg D with a peak D coming up today in the monthly chart. I cannot ignore this. I'm taking it seriously, and I'm saying that maybe, at least for a little while, we get some peace, and these threats and things like that, and that these guys have had an incredible move to the upside, and that they're going to be consolidating. That's kind of what I'm saying, and I include Boeing in that category. Question about ExxonMobil, XOM. Well, ExxonMobil, one of the heavies in the oil. Let me just put it right here. Okay. This is ExxonMobil. Look at this monthly chart. Let me show you a big picture of the monthly chart. Made a peak F top at 104.76, 2-bar reversal in the monthly chart back in 2014. Plummets to 66.55, right on the 200-period exponential moving average. rallies quite sharply to 95, and now it's down to 74. This is an arch formation. I do not ignore arch formations. They are very important in my work. What do they mean when I see them? It means that if it's in the right shoulder comes back too far, the best case scenario, unless there's a major buy signal in a shorter time frame, is another H pattern, lowercase h, to make the lowercase h go to a lowercase m. So it's in like a big rectangle trading band. So it's up 74.22 today, up 1.40. ExxonMobil, I don't think it's going anywhere. I think that it's going to be a failure pattern. It's in a trading band. Now, as a dividend stock, if I said for 3 months, it's going to trade between 78, so 4 points higher, and 69. Let's call it 70, 4 points lower. And then you've got your, 4.5? I don't know what the dividend is, but it's usually somewhere in that percentage range. Then I'm going to say, okay, maybe you can think about it, but only think about it a little lower down, not in the 74s. Wait for the 70. See how it tests 72? And if you can get a really nice signal there, I'd rather trade it with capital gains of 72 going to 72 to go to 76, then 76 down to 72, and give up my dividend. This way, at least I get 1 quarter's worth of dividend. I just find that these are not easy things to do. The patterns are terrible. Even Verizon and telephone, which always, these were the favorites for dividend. I just don't know if I want to wait a month buying it here to see it go down. I'd rather be buying these things at the lower level and give it a very tight stop for capital loss. And then if it rallies, I've got capital gain and I've got a dividend. That's the only way I'm going to be able to. I will not do that for my subscribers yet. I'm waiting. So that's a question. GE, so GE, it was rallying because of Buffett. 31. There's only Buffett, a rumor about Buffett buying. You know what? When it gets to 1550, Buffett will probably say something like, I was buying, and that'll be where he's already gotten out, probably. You can't buy on somebody's rumor. I wouldn't touch it. There's too much of a story to be told. So a couple of things I want to do. So have a look at this. You're looking at, I want you to go to, yes. So one of the brokers that I'd be very interested in was Schwab. We were in for a little bit of a gain, a little bit of a loss, but it was more, I said to subscribers, it's a feeler, because it's later on that I think the brokers are going to do really well with the whole public. I was at playing tennis yesterday, and I'm looking at indoors, and I'm looking at all the people in the gym, and I counted there were 50 monitors, and there was one that was tuned to not CNBC but to Bloomberg. Otherwise, and that's a serious person. And nothing else. Everything was like, it would be CNBC, a lot of CNBC, a lot of CNBC. Yes, CNBC. No, a lot of CNN. That's what I meant to say. A lot of CNN, maybe 1 or 2 Fox. So this was really very interesting. And I remember in tennis clubs before, wherever you went, in fact, wherever you went, you saw a ticker. I even remember a barber who went by, and he had this ticker on, then showed the Dow's price. So here we are, ABC. It's just made a trough D. Schwab, Charles Schwab, trading at 51.61, up 71 cents. Went to a peak D, all-time high at 58.1. Tell me now, just in today's session, let alone every other session that I've been doing for the last 13 years or whatever, how many Ds have you seen? That would be very important. This is the daily one, and I'm going to explain to you what to look for in the MACD and stochastic to help you identify how things are changing and how it could be, especially if you get a little doji, Chapman wave silent doji the day before. And this is probably a recycled peak D right now in the weekly, but I'm just looking at it, and this is, as I say, the brokers will become favorites later on. I want to see how this correction continues. So that's Schwab. Question I had was question about Goldman Sachs. Goldman Sachs is peak D. Oh, man. Daily peak D I did have a buy on it only because I thought what we're seeing today, I thought we were going to get about 2 days ago, and I wanted it as a buy. for Goldman Sachs, thinking it's more an experiment because this is another one for subscribers. We want to be buying it, but not yet. So it makes its all-time high, 275.31 on the 12th of March, and pulls back very sharply. He hits the 200 period moving average, and I thought, okay, now it's worth at least a gamble. We took a small long positions. Actually, we made it into two very small long positions because I only wanted a small long position, but I wanted to get in almost at the open, and then when it's lower down, it made money and then lost money. And now we're out of it. I'll be back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up. You've got, what's today? Thursday. Steve comes up. Then you've got David White, and then you've got Tom O'Brien. I believe Andy should be there. So at 13.35, I was asked about the. So the New York Auto Show is going on right now. I was hoping to go, but my family's coming here for the weekend, so I won't be able to go. And I wanted to say, I thought it was going to be a very important one. Got some pictures of the cars. I mean, this is the era that I talk about all the time, where the front, like in 1969, like in 1955, you can go through all these different periods where the front of the car and the back of the car become so fancy that one accident, or it used to be, I used to talk about weight, that the weight of the bumper in the front, the fender in the front and the back, were almost the weight of the car. And now we're getting such fancy stuff going on in the front of a car and the back of a car that to have one little accident can cost you just an arm and a leg. So this is the period we're going to. Fancy, incredible design. Design becomes more important than functionality. Very interesting phase. Now, look at this. Ford goes to a peak D on the 13th of January at 13.35. It gaps down the next day, goes to 10.19. Now it's at 11.04, trying to rally. But it was a weekly peak D. I don't know how many times today have the most important indexes, time frames, shown Ds, and that's what I'm going to be talking about. April the 3rd. It's going to what's the importance? What can you make of it? What's going to be the impact if we start to see monthly charts start to pull back? How long can it last for? What happens when you get a peak like this? Can you immediately recycle to the upside? All the things I'm going to be discussing and what to look for. So with that said, I think I'm about to round up. Oh, and the song, the Chapman Wave song. I will include the Chapman Wave song, buy at the low and sell at the high. Hey, that's what we did. We sold at the high for the QQQ series. And we remember that on March the 6th of 2009, we actually bought the exact day, almost within the hour or two of the exact low in the diamonds. So yeah, what can I say? You can't pat yourself on the back. Believe me, not with the market. There's always something waiting out there. So look at this closely. Peak Ds, that's what we're going to be discussing in the webinar. Check out my newsletter. Go to the front page of TFNN. Thanks for being here, and a happy Passover and a happy Easter to everyone who's celebrating. See you all on Monday. Have a great day. Stay tuned.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.